And just to give you a quick introduction about Digital Collective Africa. So what are we? So basically and essentially, Digital Collective Africa is a community focused on African investors, incubators, accelerators, bringing them together to support really at the core early stage startups. So we work on work groups projects that have for aim to release open source assets that can then help early stage founders in the different navigating the different problematic alongside their ventures. So our community is composed of about now 320 members, so mostly investors from across Africa. And the way we organize our community is the investors, they join usually and they work on work groups through events that we do alongside our VC conferences. I will have the occasion to explain it. Then we also have our communities of incubators and accelerators that we animate through our WhatsApp groups. And of course, the founders that we have alongside our joint ventures, which is Africa Arena. And have the occasion as well to present you more. And what we do, essentially, five core things. We provide financing resources to facilitate early stage investments by standardizing processes. So you can think about due diligence checklists, etc. Then we also provide educational content, such as now, you can consider it as one. The panel will really be here to give resources, give insight about how to navigate incorporation. So that's also one of the efforts that we do. We also provide market data. So we provide reports. We write a lot of reports. We work with different ecosystem players, so such that some insight and market data can be available to the large ecosystem in Africa. And we also have some contributors. We work with regulation actors, all for the benefit of the community, especially the tech community in Africa. So at the moment, in terms of what we are working on, today we're going to present what we have done for on the incorporation side. You will hear more about the way to navigate. Okay, should I incorporate in the US, UK? What about Africa? What's possible? What are the pain points and so on? But we also have other work groups, some activities that we are currently wrapping up, such as due diligence checklists, debt funding playbook is currently in progress. We have finished since last year governance toolkits, playbooks for investing in Francophone Africa, which is more destined to the VCs that are interested in investing in Francophone African startups. We saw that there was a bit of a gap there in terms of the access to information. So currently, these are the active work groups, key contribution that we are bringing. So if you're interested, even after, we can be in touch and then we can see how to incorporate you as well in the discussion. And the way we disseminate the work that we do is mainly through online workshop, educational videos. We do in-person events, which is part of the VC conference, boot camps that we do alongside our summits through Africa Arena. But we also have other partners that disseminate the work and distribute it alongside the community. And we have an online platform where everything is accessible in basically one platform. So Africa Arena side, just to give you a bit of an introduction about Africa Arena specifically. So Africa Arena is a deal flow platform that's specifically focused on connecting startups to investors and corporate. So we do that through a series of events that we have across Africa. We did already one in Kinshasa, one in Nairobi. And through this effort, we animate the Digital Collective Africa community as well. So we organize some side events, meetups, such as the VC conference. All these efforts are just to bring together the different community members and continue to work on the various work groups. So just a bit about the VC conference events. We do that every year in Cape Town, but also it depends on the agenda every year, but we do it sometimes in other cities across Africa. And the goal is to work and disseminate those work groups and continue to bring those contributions together. These are just some of the pictures from last year. It's very interesting to bring all those stakeholders together in one room. And we also organize boot camps just for founders to train them. And when we work on those deliverables, we also have the occasion to empower the founders when we do those sessions. Really focus on the startups and equipping them. And we also have the online workshops, educational videos, such as this one that we have now, so that we help the community step by step to be empowered with the knowledge that we are building on our side. So, and then at last, I'm going to be able to present it to you now before we jump into the panel. But we also have our online platform, our website, where you can see the results of all our works all in one place. And it's accessible on digitalcollective.africa. Even as I present, you can go there, you can type it on your laptop, on your phone. You'll be able to browse through and see the bits of the works that you have been doing. But without any further ado, and just as I mentioned, we also have various council members that animate the groups, that oversee the works and the different deliverables that we do. So it's really a great group that is bringing together all this work. But just to introduce to you the Incorporation Playbook and to give you a bit of the base where the conversation will be from. So the Incorporation Toolkit is a practical research-backed decision tool based on the research that was run by Sendemo, which is also Abdu is part of our council, with Systemic Innovation to bring insight about how to navigate the complex question of where and how to incorporate when it comes to your startup, and especially startups in Africa. So the way it came together in terms of the toolkit, it started as a collaborative group effort where more than 30 firms or VCs, ESOs, or even startups came together in the VC conferences, started the conversation led by Abdu. And then it led then to research that was published. It's actually accessible now. You can scan the QR code. I will also drop it on the chat on offshoring African startups. So beyond founder's choice. And this research, I think it's about more than 30 pages. It's very comprehensive. It gives you all that you need to know about the various information, where to incorporate, why you should choose to incorporate there, not here, what is complex, what to consider, and how to navigate the complex question. And from this research, we then moved to a practical and interactive playbook that is available online. I would have the occasion to just share my screen and give you a very, very brief demo so that you have a quick view of how you can actually navigate through it. So just to give you a very, very brief demo. So in terms of the toolkits, as an overview, online, there's 4 parts where you find information about the incorporation toolkit that we have developed. So the first one, it's composed of 10 observations that came from the research. So the findings of who offshore, when and why, including new observation from research run by the European Commission and Incorporation. Then there are system dynamics, so loop and root causes that make offshore incorporation feel inevitable for startups, and why actually it's so difficult at the moment. And it even gives recommendation on what and how it can be navigated and done better. And then you also have a decision tool in a set of 4 questions that can then help you to tell you the recommendation of where you should incorporate. And I will just do a quick demonstration. And then at the end, you also have a jurisdiction guide where you have about 8 jurisdiction that you can navigate and get information from. So if you have to incorporate in the UK, Singapore, South Africa, etc., what you should consider as an African startup. So just to give you a quick of a glimpse, it's very interactive, some observation, about 10 of them. You can take your time, read it, bring various insights. Then systematic approach, same thing, gives the root causes of why the incorporation is such a hard topic to navigate, especially as a startup. And then you have the decision tool, where by answering some questions that apply to your startup, you can then get automatic recommendation of where you should incorporate and how you could over time develop your incorporation strategy. And at the end, you also have some information about jurisdiction signals, whether it is the US, UK, what to consider, why should be the best fit for you, and some also consideration from on the African side. So Mauritius specifically and South Africa, based on the findings of the research. Of course, there are way more information, but it compares the key findings of the research that you have been running. So that is it really in a nutshell. I'm not going to take any more of the time that I had allocated, but I'm going to pass now the mic to Raj, the moderator for the panel and the discussion that we're going to have on navigating incorporation in Africa. So Raj, I will hand it over to you. Going to have the
okay. Here we go. So firstly, good afternoon to everybody. Thank you to my panelists. For those who don't know me, my name is Raj. I do a few things. I'm a lawyer at a law firm called Dentons, largest law firm in the world. I'm an investor. I've invested in more than 70 plus companies together with my business partner, Vishal, who's based in Nairobi. And I'm a non-exec in a few companies, including one climate fund. So I come at these things from various different angles. So whether it's a lawyer hat, investor hat, or fiduciary as a director. I'm going to pass to each today's topic. Where do you domicile? Where do you incorporate? And I'm going to ask each of my panelists to say a short word about themselves and make it short. And also, can you tell us of the companies that you invested in? I hope you've done the homework for this. Give us a quick breakdown of where they're incorporated, so to give some context to the discussion. And I think one of the things I want to get out of this discussion today is give people some guidance. And I think the tool that we have, that Dan showed today, is really a good tool. But as with all tools, the tools only give you half the story. And the real story often comes from practitioners who are actually in the trenches, who've actually been through the process, understood the pros and cons, have some scars and war stories on their back, and can help you navigate this process. What do we want to get out of the end of the process? We want to get out of a clear idea of where you should incorporate. And I think one of the things that looking at that digital collective document is not you do it once and that's the end of the story. You're constantly thinking about how you might change. It's not the end of the story, right? So there may be different strategies for that. So let me stop there. Just one thing I would say is that a lot of people have some inherent biases to incorporating in particular jurisdictions. I think I live in the UK, and often, my bias will be, well, why can't you incorporate in the UK? Because, by the way, I get EIS tax relief. I understand how UK courts. So just because I say the UK is good for me doesn't mean that it's right for other investors or indeed right for anyone. There's an old joke about, lawyers and jurisdictions. If you incorporate your WhatsApp group, I would have incorporated my WhatsApp group in the UK. So there we are. Let me stop there. And I'm going to pass to each of you to do those things. Quick introduction, how many companies in the portfolio and how they spread across jurisdictions. Who do you want to go first? Who's on? Zach.
Ladies first. Dami
ladies first, go on.
Ladies first.
Well, somebody will pick us up for that not being politically correct, so be careful.
Thanks, guys. Hi, everyone. Good afternoon, morning, evening. My name is Thompson. I run an risk intelligence due diligence firm that provides, well, due diligence services to investors, fractional CFO services to founders. Angel invested, used to work at EcoVC for 6 years, first employee. But Angel invested in about 20 or so companies across India, Europe, African continent, the US. Most of them are incorporated in the US. Some of them started obviously from local entities, but honestly, most of them are at some point along their journey got reincorporated in the US once they receiving VC funding.
Andrew, you want to go? Thanks, Tommy.
Yeah, sure. Andrew McBarnett, I'm the CEO at Points Africa. We're a relatively new startup on the continent, fintech. We built out a loyalty ecosystem starting in Ghana, creating a cross-country digital currency using loyalty. We've incorporated in Mauritius, and we do have a holding company there. I'll let Samir jump in, who's on our team as well. But we've got a holding company in Mauritius, and also then opcos in South Africa, Ghana, and Nigeria currently. I'll hand over to Samir, who can give a little bit more context as well.
Yeah, thanks for that, Andrew. Hi, everyone. Thanks for the introduction, Raj. I'm Samir Murji, the Chief Legal Officer for Points Africa Group. I support the company in terms of their corporate structuring, corporate commercial, and securities work, and had the pleasure of putting together our corporate structure, which Andrew briefly described there. By way of my background, I'm a corporate lawyer, been practicing in securities and been assisting large institutions and also startups. I started my own practice a number of years back before joining Points Africa Group full-time, where I supported a number of founders in terms of their corporate structure and also a number of raises all the way from seed rounds to senior financings. Yeah, that's a background.
Samir, you're based where? Where are you based? Where's everybody based? Can we quickly just do
We're sort of all over.
No, where are you sitting today right now?
Right now, I'm actually in the UAE.
UAE, okay.
Yeah,
but if you have a base, where is it? I'm just trying to get context here, right?
Yeah, so I would say in terms of my background, I'm Canadian, from Toronto.
Where's your house, Drew?
In Toronto.
That's what I'm asking.
Which house?
Okay,
Exactly.
Which house? No,
Okay.
but
Toronto. Okay, fine.
have recently moved to the UAE.
Can we quickly, Zach, can you do the same, please? Tell us.
Yeah, of course. Yeah, I mean, I'll start before Raj, the headmaster, raps me on my knuckle. Raj and I are friends for a very long time. I'm based in Cape Town, South Africa. I'm the co-founder of Launch Africa Ventures. I'll get to that in a second, but I used to run Startup Bootcamp in Africa. Raj is one of our LPs in that fund. We were the first multi-corporate backed accelerator on the African continent from almost 10 years ago. Launch Africa has 175 investments in startups across Africa. So from a sample size and talking about jurisdictions and corporations, I think we have enough of a critical mass to give a relevant comparison, which we can get to later. Yeah, across 25 different countries. And this is now our second fund. We manage about $65 million of AUM. I'm also a very active angel, similar thing, multiple jurisdictions across Africa.
And Zach, did you do can you just give us like quick percentage of, which countries that you're?
Yeah, absolutely. Yeah. So it's interesting how it's evolved over time through Startup Bootcamp Africa, which was the accelerator that we ran. But 80% of our companies were in the US, in Delaware specifically, from an incorporation perspective. 15% the UK, and 5% were literally just the Francophone countries were in Paris. Launch Africa Fund 1, it was 60% US, about 20% the UK, and the other 20% was split between the Netherlands, Singapore, and then the UAE. What's interesting now in Fund 2, which is the last 2 years, the US has significantly taken a step back. So it's now interestingly just around 50%, and it's actually getting lower. So it's at 50% right now. The UAE is really catching up. This sounds like a Formula One race, who's passing whom. The UAE and the UK are almost tied in second, and the rest is still a combination of Singapore. I will say the one thing though is all the French-speaking African startups, the ones in Cote d'Ivoire, Senegal, Tunisia, Morocco, continue to be incorporated in Paris.
In Paris. And Dami, can we just quickly tell us what the sort of split is, please?
I think it's pretty much what the same as Zach. I think most of them, I would say probably 80 to 90% of them incorporated in the US.
Okay.
Again, some of them started, sort of locally in Nigeria.
Sorry to cut you off. I want to move on. So I think where we are today is historically US predominant, US still dominant, but getting perhaps less. Some of these newer jurisdictions, UAE getting more, UK perhaps staying the same, and then some of the outliers, I would say Mauritius, South Africa, and Singapore are coming up the rankings. Is that a fair sort of commentary of where we are? I think that's where we are. So go on, Dami, you want to say?
I would say the UK is probably doing a lot more incorporations. There are a lot more companies incorporating in the UK now than before.
Okay.
Yeah.
And I would say South Africa is definitely only for South African founders.
Yes. Okay. So we're going to play a little game. Some of you may have not been here that when I was talking about the little game. So I was thinking about how to make this, and it's very difficult, right? Making it online, interesting, and engaging. And I thought we're going to play a little game. And I was thinking of 4 things that I think, forgetting about the legal side, or part of the legal side, that you would advise someone to think about when you're incorporating. And the acronym that I've come up with is CCTV, okay? And it's not closed circuit television. So as we go along, you get a prize, and we'll tell you what the prize is at the end. If you can guess, and by the way, the answer is not right because you say it, right? The answer is right because I say it's right, okay?
Wow.
So you get a prize if you can guess what each of CCTV means, okay? So let's open the conversation by having a question about founder comes to you today and says, I'm doing a startup. 3 questions you're going to ask him that will help him navigate that. What are the 3 questions? Let's start with Dami first.
So I think it would be sort of, and I'm going to use your acronym. I don't know if this is the right one, but I will try my best. Value. Like, what is the value of incorporating in that local sort of jurisdiction for you as a founder? I think the second thing, I'm a long-term kind of person. Second thing I'll think about is what is the long-term vision for your business and how are you thinking about where you want your business to be in the next 10, 15 years and start building for that kind of company right now. The third thing would be also just your skill. Where you're thinking of scaling to, how does that impact your business? What kind of opportunities are you seeing in what markets, and what does incorporation look like in those markets? And I think for the long-term one, that would also sort of the investor conversation will probably come under that one, because then you also have to think about if you do exit your business, how are your investors going to exit? How are you thinking about the capital gains tax, all of that good stuff. So there's a bit, there's a lot packed into it.
Okay, so first of all, Dami, congratulations. You got one of the CCTV, which was vision. Okay, so well done. So tick in the box and you collect your prize at the end. Let me come back to the others on this conversation. So those are kind of what I would say quite intangible. I want to break that down a little bit, okay? So Dami talked about value, vision, scale, okay? Now, those 3, and I think a few other things, but let's just stick on VVS for the time being. And And those three things, let's just break them down into each one. Okay. So value, what is in the context of incorporation, okay? What is value for you, Zach?
Yeah, I mean, it's thank you, Raj. Very, very good point. So what I want to just talk about in terms of value, and I'm going to break value down into commercial value first instead of just investment value, because there are two different value here. But commercial value, it's very important to have, because I'm assuming this is for tech startups and it's mostly B2B.
Yeah, we're not talking about SMEs. There's a whole other ball.
Okay, cool. Yeah. So if you're a tech startup in Africa and you want to become a unicorn or a half unicorn, right? It's pretty obvious that you have to have either a B2B or a B2B2C business model. So you got to be engaging with banks, telcos, insurers, big pharma companies. If you ever want to get to be, I mean, you can't be a direct to consumer company. It's highly unlikely you'll succeed. So therefore, you got to think, if my jurisdiction is in country A, but I'm looking to get EcoBank, Vodacom, Sanlam, Equity Bank, I don't know, Discovery as my commercial partners, are there legal situations where they would not work with me if I was in this jurisdiction? Why is that important? It's because irrespective of where your jurisdiction is, if your IP is not in the jurisdiction where your operations are, that is a material reason why a big corporate would say, thanks, but I'll work with your competitor because the IP sits in the jurisdiction that I can work with, right? So there's where you're incorporated and where your IP is held. The two of them are not mutually exclusive. So that's why the commercial value is dependent on where your IP sits. And I've seen situations in South Africa, at least, where major South African insurers and banks, without divulging names, have said no to working with startups, no matter how good the tech or product is, because there is no commercial way in which they could work with a company that wasn't in the same jurisdiction from an IP perspective. That's on the commercial value side. Then you have the investor
Sorry,
value.
can I just ask you a question there?
Yeah, please.
What you're saying, like, let's pick, because I like specifics, right? So let's pick on that. Yeah. So you are a South African startup. You want to sell to South African customers. And what you're saying, I think, is that your IP needs to be South African IP or registered in South Africa.
Correct.
Now, there's a separate conundrum on this, because obviously when you export IP out of South Africa, there's a whole another ballgame, right? Yeah, but I think because there's a lot of issues, and I've seen this firsthand, of trying to transfer IP offshore.
Correct.
So I think what you're saying is that irrespective of that, irrespective of these problems, if your market is South Africa and you are going to sell B2B or B2B2C to South African customers,
correct, yeah,
then you still want to incorporate South Africa.
You want to incorporate, exactly. When you incorporate South Africa, have your IP in South Africa, but nothing prevents you from being incorporated in having a holding company in Delaware or the UK. And by virtue of ownership, you indirectly own the IP, not directly. So you could still set up a UK holding company, right? The IP still sits in South Africa, but the UK holdco owns 100% of the South African company, but the IP sits in South Africa. Therefore, a Sanlam, an Old Mutual, a Momentum could commercially work with you. Okay. So you have holdco overseas, opco in South Africa, but IP sits in South Africa. That's what I was trying.
Andrew and Samir, I mean, let's talk about your real life examples.
Exactly.
You're not doing theory. You've done this, okay?
Yeah, so maybe I can start first from
can you before let me frame the question a little bit, okay? Yeah. So what are we trying to do here? We're trying to give people some guidance, and I want you to give good and bad, huh? I mean, like I'm sure you fucked up along the way, because everyone does, okay?
No,
so I want you, and excuse my language, I want you to tell us the good and the bad and how you got to where you got to. And just because you got to where you got to today, I want you to tell me honestly that is where you're going to be. Okay, so let me frame the question that way.
All right, good framing, actually. And yeah, we have messed up along the way, and Samir can talk about how we corrected it. But yeah, I mean, when we started off, like Samir was saying, he's you asked where his house was in Canada. Most of our guys come from Canada, as well as from Africa. I live in Johannesburg now, but mainly spent a lot of time in Ghana. When we started off, we were initially incorporated in Canada. And then when we were looking at growing the company as well as structuring things properly, based on like the question you're asking around value, long-term strategy, we looked at taxes, we looked at tax agreement across
Oh, you said Texas? You said Texas?
yes.
You get a prize. Well done.
Good. And then you mentioned Zach mentioned IP as well in terms of where things sit. And of course, the type of company we are, we're talking about loyalty, but we work in terms of connecting the dots between pretty large clients. Like our client base includes like MTN Momo, Access Bank, Here's Holdings / UBA, Jumia, etc., who go across different regions. So as we grow, we've got to take all of those things into consideration, working closely with those individuals, including where the data is held, where our IP is held, how we can move money across jurisdictions, etc. And so we had to change and where we would actually take in investment as well, being an African fintech. So we took the decision to incorporate our holding company in Mauritius, basically.
Okay, I want to pause there. Just pause there, okay?
Sure.
So you had a whole list of things.
Sure.
Right? I mean, a whole list of things. And taxes, obviously, you win the prize for the taxes point, but you had a whole list of things.
Yes.
The thing that occurs to me is that there is a list, okay? And I suspect, and Dan, maybe if you're listening, I think what we need is this list, the A to Z of the list, right? Because today what we have, and we'll talk about some of this today, everyone has a list in their head and a list from their experiences, but no one has the list, all right? And no one has the list for every single jurisdiction. Okay.
Right.
So if you want to do like a organogram, you first of all, I would start, if I was doing the exercise from the beginning, I would start with a list that applies across the board. And then you would have a list if you were in South Africa, a list if you're in Ghana. And that's the thing I think would help founders to actually, a tool that actually would help them to understand if they go through, I always say, you almost could do like an AI workflow for this, right? If the answer is this, go here, answer is that, you go there, answer is it, and then you end up with an answer. Now, that answer you still need to road test, but I feel like one of the outcomes or output from this should be this list. And maybe with links, maybe with AI to sort of say, okay, maybe with war stories. Anyway, if everyone thinks that's a good idea, or if you think it's a bad idea, also shout out, right? But what do you think?
Yeah, I mean, it's funny. Oh, sorry.
Go on.
Yeah, no, I'm laughing because this was pretty much the thought process we went through, and I think when we're advising people on this panel about where do we incorporate it, and I think Zach mentioned it quite well, but it's not so much where to incorporate, it's where's the substance, where's the IP revenue, what is the governance framework in each of the countries that you're planning to launch in, and the incorporation must match that commercial reality. So, and I believe that your other C is compliance, but and of course the lawyer has to bring that up.
No.
It's not. Well, I think compliance is quite.
It can be, but
I think it's quite important because I mean, looking at each of the regimes that you're planning to operate in, or each of the countries within Africa, the major risk is the regulatory fragmentation. It's very different across different countries, as you're aware, and so really it's jurisdiction by function, and then of course taking into account taxes, the commercial reality, the compliance regime is also important. And then I'd also say de-risking your corporate structure is quite important as well. Having your IP segregated, having your commercial revenue generating entity segregated. If something happens from a compliance perspective, an audit or a sanction, which can happen even for the most compliant of companies. And that's something that should be at the forefront of your mind when you're structuring when
Yeah,
you're
but by the way,
putting your structure together. So
by the way,
if one country goes down in your structure, the entire structure should not fail.
Not fair. But by the way, I was being slightly facetious when I said compliant is not. It's not on my list, but it is on the list. Let's make a differentiation between the list and my list.
We can add another C.
Well, then it doesn't work as well. CCTV. I mean, then it becomes CCCTV, and then you lose the whole point of it, right? Anyway, let's just. I want to keep drilling down on that and maybe extend the discussion to beyond Andrew and Samir on Points Africa, which is, tell us about a startup or company that that invested or founded in the wrong jurisdiction, and how did you A, fix the problem, or B, what are some of the problems that were created by being in the wrong jurisdiction? And I think these kind of stories are helpful to tickle some ideas and get the juices flowing to have an open conversation. And I know Andrew and Samir, we never talked about your pain point, but we'll come back to that in a minute, okay?
I think one that I know about, not that I invested in, but know about in because of working at EcoVC, was a company or a startup that incorporated in the UK, not because it was wrong to incorporate in the UK, but they generally had no nexus or no connection in the UK, except because their investor, who was the lead for their Series A round, was based in the UK, had their fund was set up in the UK, and just told them to incorporate in the UK. Eventually, that investor exited the company, and it was a case of, okay, what are we really doing here in the UK? And obviously, there's all of the taxes that you have to pay. And so it just became an administrative burden of incorporating in the UK, but no, just not. And they still had a US entity, still had a Ghanaian entity, had a Nigerian entity also. And so they had all of these companies incorporated across the world. But one of them had just, there was nothing that they were doing there. And so there was this, just conversation around why do we still need to be in the UK? And can we just sort of...
So what happened? Did they
reincorporated? They just moved everything, shut down that entity, and then moved everything
so
to
it
the
can
US.
be done, right? So I mean, I think the point about these things that most of these mistakes are not fatal. Okay.
Yeah.
In terms of legal incorporation, mistakes are not fatal. What is fatal, I believe, and I'll be interested in Zach's and Andrew Samir, what is fatal is from a business perspective if you incorporate in the wrong place. Okay. Legal, you can change. It might cost you a bit more money, might take you a bit more time. It's fine. But if you incorporate from commercially, like to Zach's point, you want to sell to B2B in South Africa and you go and set up in the US and customers saying no, then you're, not put a fine word, you're kind of screwed, right? So I think one thing, Dami, you touched on, which is interesting, which we sort of touched on, but we haven't, which is who, the old saying about the dog and the tail, right? Is it the tail that wags the dog or the dog that wags the tail? And I think this discussion is very much about, who's doing the wagging. And by the way, you touched on, the investors saying, hey, we're UK VC, we want you to incorporate in the UK, right? Now, it's actually quite difficult to say no, but they're giving you money, right? So what do you do then?
I mean, they did. The VC fund was the lead, so
yeah.
I don't think
you just bend over and say, okay, thank you, sir. Which way do I go, sir? Right? I mean, and that's not the wrong answer. That is the right answer for that time, right? I mean, Samir, I think
I think if you really do have a defensible corporate structure, and you show the shareholder value in that structure and the de-risk, especially in Africa and different countries, significant compliance risk.
Yeah.
And if you can show that, there's value there.
So you've got to show value, right? So
absolutely.
if I don't know this founder, I don't know startup, I suspect, the VC said, hey, incorporate in UK, and he just said, I want your money, and off they went to the races, right? Whereas perhaps, I'm not saying for sure, perhaps if you sat down and say, look, dude, I can give you a lot more value in terms of where this company can grow if I'm incorporated in X, Y, or Z. And I think the strength to be able to have that conversation when you're faced with, I'm going to give you the money, so just keep quiet and do what I tell you to do, is what founders need to have the ability to do that. And I think the whole point about the dog and the tail is, how do you wag, right? Which one wags? Which one wags who? And I think the other point is that sometimes it's an economic question for the founders. So for the UK, for those who don't know, we've got an EIS and SEIS scheme. I love them because I get 30% or 50% back of every investment I make. Okay, so it's going to take a lot. And by the way, I have done schemes where it was originally EIS, and then the founder got an investor in the US who said, I want you to move to the US, and it was within the 3 years. And he said, I want to move to the US. Now, I said to him, dude, fine, but keep me whole, right? So I think as in all these things, there are ways to get around the problem. So it's not, when you make that decision initially, first of all, I think what I'm taking away is be brave and fight your corner, and don't get pushed into just because they're giving you the money. To understand that even if you do get pushed into something, that's not the end of the story.
Yeah,
Right.
I
would add that. Sorry, go on.
Go on, Zach.
No, please go ahead.
I would say that a lot of the term sheets, fund mandates, they're drafted for, Delaware C Corps maybe a decade ago, and they've never been repapered. And that's just sort of, maybe that's what outside counsel has supported these funds on doing. So it's just a duplicative process of one deal after the next. So it is difficult to break that cycle and say, hey, we're going to do something different, and this is what it looks like. So I do agree, but I think there's a cost element to that. I think there's a process efficiency for certain funds. I can't tell you how many Delaware C Corp based term sheets I've seen. So I think there's another element of it in terms of investor cost. And if it's not broke, don't fix it type of I guess theme behind those investments. So I would just add that.
Okay, Zach, you were about to jump in. Go on.
Yeah, the only thing I would add, and this is the elephant in the room amongst a few other things, is exchange control. And Alex, for a friend of mine, and people think that it's only a South African thing. It's a thing in a lot of African jurisdictions. So, Tunisia has very strict exchange controls. So does Nigeria. So does Ethiopia. I think Ethiopia has gotten a little bit better lately, but just getting money out of the country is almost as important as tax. You can have 0% tax, but if you can't take your money out of the country, your return is zero. I'm sorry.
Yep.
Right? So exchange control should probably be like the first thing. It should be like CCTV, right? And it's just, if you can't take your money out of the country, I'm sorry, I don't care if you made it.
I'll give you that.
I'm like, I've made a 10x on my investment, but my return is zero because I couldn't take the money out of the country.
Okay, we'll extend it. I'm going to give you that, Zach. ECTV. I'm going to give you that.
Yeah. So I think exchange control is super important. And then also the idea of, so for example, Tunisia and Nigeria and even South Africa, Adrian Dumise from Dumise Attorneys and a few other people here that can talk about what's called stapling structures, which essentially means you are an investor in a South African company. A similar thing applies for Tunisia, or Nigeria, or anywhere else. But you become a shareholder in both entities. And over a period of time, you artificially wind down operations in one of the entities so that you can then justify your shareholding in the new entity. The only folks that make money out of this are lawyers, right? But Raj is very happy. But that's very important. Exchange control is probably even more important than just tax and IP and.
So I'm gonna accept your request to include E as in the acronym. So we will call it ECCTV. We still haven't got We had so Zach gets exchange control, Andrew got taxes, Dummy has vision. We have two C's.
But isn't one of the C's capital gains tax? No, it's not.
No, you were halfway there. Capital. You capital. Okay. It's capital. Okay, so you got two so far. So in fact, we got one more. We got one more C to play with. But let me get back on point. So Andrew, you never and Samir, you never told us you're a disaster. But let me ask you the question. I want 2 pointed questions, right? Number one, and each of you gets one question, but keep it short. What's the incorporation advice you wish someone had given you before you learned it the hard way? Okay. And what was the moment you realized your incorporation structure was either genius or a slow-moving disaster? And what did you do about that?
I'll start with the semi-disaster.
Okay.
So I think thankfully we hadn't gone too much down the rabbit hole before we were able to adjust. As mentioned, we started, with an incorporation in Canada. Then we started incorporating opcos in each jurisdiction that we were looking to launch in. And then when we were getting our first round of funding, VC funding, we realized that we had to change things, or if we didn't, it would become extremely expensive to readjust after. As mentioned, we're working with some heavy hitters like MTN, Momo, Access Bank, etc. And we've got to define the commercial agreement up front so that from a legal perspective, we knew which company was going to be entering into the agreement, like you mentioned, in terms of exchange controls, getting money in and out, etc. So we had to look at all of those aspects. And then, of course, with an investor coming in, you're looking long term in terms of, okay, with the exit strategy, like Zach mentioned, if you do triple, quadruple your valuation and there's an exit, then how do you actually get your money out to give everyone and reward everyone for the money that was put in? So thankfully, when we were getting our funding in, we were able to sort of adjust and then recently adjust even further.
So hang on, you started out with Canada, then you shimmied where?
We shimmied over to Mauritius, but in between that, we had like some opcos set up in Nigeria, South Africa, and Ghana, and then we had to readjust everything so that the whole co could then own the operating companies. And before I hand over to Samir, I think what should be also mentioned from a founder's perspective is that you're a startup. You don't have a lot of money. You're putting money into your product. You're trying to, get into market. You're trying to get people like Zach and Dami to invest in you. So basically, you don't have a lot of money to invest in a corporate structure and make it iron proof, right? So that's the other side of the thing that you need to think about. It's cheap incorporating in Delaware for like $300, but it may not be the right approach. So effectively, we kind of shifted away from a semi-disaster, but of course we spent a lot of money doing that sort of thing. Even having Dentons as a partner as well, it ain't cheap. Lawyers. So,
we're very reasonable, very reasonable. I don't know what are you talking about.
Very efficient as well. But I'll hand over to Samir to give more context.
Yeah, and I think you did a great job there, Andrew, of kind of describing it. But we needed to operate in different countries. We needed trade licenses. We had to create companies in each of the operating countries that we were deploying our platform and onboarding partners. There's also foreign investment rules that we have.
Yeah, that's what I was going to ask you. So did you look at BITs? So for those who don't know, BIT is a bilateral investment treaty, and Samir will confirm, but Mauritius today has the largest number of bilateral investment treaties with African countries. So that's why a lot of funds invest through Mauritius. And by the way, just not to promote anything, but by the way, Dentons has an office in Mauritius.
We're aware. Yeah, no, and that's an important caveat of or consideration on why Mauritius and not Delaware. That's one of the major the treaties themselves is strong enough to warrant having a Mauritius incorporation over Delaware.
And just for the audience who may not all be familiar with what a BIT does, do you want to have a go? Do you want me to have a go?
Yeah, go ahead.
So bilateral investment treaty basically protects your investment in country. So if you made an investment, let's take, for example, Nigeria, via a Mauritius holdco, right? And the Nigerian government expropriated that investment. You can actually go to court. All these countries signed up to a bilateral investment treaty convention, and you can sue the Nigerian government. And there's a mechanism to then recover monies that were expropriated. Now, expropriation obviously is an extreme example, but there are other categories as well. So a lot of, especially large-scale infrastructure, oil and gas, my background is infrastructure, projects are structured. Even sometimes they just put in a BIT country, and in Africa, mostly it's Mauritius, in the middle of the structure to get the benefit of the treaty protection. So that Samir, do you want to say anything else about
Absolutely, and I think that's a good description. But I think that suggests also that Mauritius is a safe country to house your IP, for example. If your IP is housed in another country and it doesn't even necessarily have to be expropriated. There's also compliance risk. There could be sanctions. There could be, there's new legislation that's come out recently in Ghana that I was just kind of reading up on this morning, and things are changing constantly, and I think there's quite a bit of risk. So the way I describe it to Andrew is, when you're looking at a robot, or the Terminator is the example I think I gave. When the Terminator loses its arm, it still keeps moving forward. And that's the type of structure that you need to create.
Yeah, that's a good analogy.
Yeah.
I'm not going to add it to my tea. So teas. Okay.
Just one thing, sorry, and maybe this is a question for all of you, on compliance in Mauritius. So post incorporation, as far as the last that I know, it's very interesting. Has been very tedious, has been very just stressful.
I like the fact
I like how you describe that.
In the same sentence.
It is interesting.
Which one is it? Is it interesting and tedious, or interesting but tedious?
It's both. But I'm wondering, Samir, what that looks like for you as a company, and then for Zachariah and Raj, what does that look like for you as investors and founders?
So let me go first, because I have some pain points here. Okay, so I've invested US, UK, all over the world, right? India is painful, right? I mean, India is like super painful in terms of paperwork and blah blah. So India is like, if you like, it's like is it what is it when you
like India's a bit like Germany?
Multiple personalities, right? So on the one hand, you got Arda, which is like super great. You can do everything on Arda, it's great, and then you still have people sending pieces of paper. And you still need notarization and legalization, all sorts of stuff. And Holland, same way, notarization. You can't move without getting notarization. Okay, and I think the issue often is that, and KYC. I mean, Mauritius. I still think they were using pigeons to move papers around, like until 3 years ago. Okay. So I think all of these pain points, there are lots of pain points, but the question still is, to come back to what Zach talked about at the beginning, those pain points overcome the fundamental point, which is trying to grow or scale a company, okay? And you can deal with a lot of the pain points. They just cost more money and time. But if you're a high growth company and you want to be $1 billion company, where should you incorporate? That's like the fundamental question, right?
Yeah.
And everybody kind of defaults to the US Delaware, because guess what? Everyone wants to IPO on NASDAQ.
Yeah, I mean, that's an important point that we haven't talked about, is also, I mean, founders at the seed stage don't really think about where they're going to be in 10 years, but propensity to listing should be another item.
And M&A, by the way, and not M&A. Just listing, and exits.
Yeah, I mean, think about what's happening right now with Flutterwave, right? Flutterwave has been talking about a listing for the last 2 years.
No, 5 years, mate. 5 years.
5 years. Yeah. But there are talks about them listing in Nigeria on the Lagos Exchange. I've heard things about them listing in Johannesburg on the JSE, then of course NASDAQ and LSE. The question is, how realistic is a dual listing? I mean, dual listing, the jury's out, but dual listings haven't really worked well for African tech companies. All you have to do is talk to Jumia or Fowry in Egypt. So there's the other issue is, I mean, so capital and listing are related because your propensity.
Oh, no, we did capital. You got capital. Okay.
Yeah, we did capital. Yeah. I mean, a lot of investors just won't invest in you unless you're in that particular jurisdiction. But then eventually, how do you get to a path towards a listing? So also, who do you want to, this is very far out, but as a founder, who do you want to own your stock once you're listed? So and the answer is not always obvious. So for example, in South Africa in December last year, we had a really big IPO of a company called Optasia, Optasia, right?
Yeah.
Now, against better common judgment, they decided to IPO on the JSE, not the NASDAQ or the NYSE. And they got a better price on the JSE. So they listed for the equivalent, the dollar equivalent of about $1.5 billion. It was about 26 billion rand, right? Now, they would not have gotten a similar price had they gone to the US. So you also have to sort of vary, like, where is the most likelihood that I will get the right mix of pension funds, asset managers that will eventually, front run my book building process.
But I think, but Zach, I think, let's be honest, okay? So, how many African companies have listed on NASDAQ? And number one, I think it's 5 or 6, maybe.
Yeah, it's tiny.
And how many have been successful? 0. Okay, so let's just understand that. Now,
no, for sure.
Now, I think what's more realistic is a merger or an M&A. Okay, whether it's on the continent or the US. And I want to take you back. Actually, I hate to say this. Zach actually said this earlier, so I'm going to give him another one. You said customers. I think you said, where your customers are. So that is the second C in my CCT.
Yeah.
And customers, I also would say, is that if you are a startup in Africa, who are you selling to? Not only your product, but who can you sell to as a business? All right. So if you're an American, if you're US Delaware C Corp, and you want to sell to a US company, it's piss easy. 6 to 8 weeks, you're done. The transaction is done. Okay. Try selling a US company, a company registered in India or South Africa or Nigeria or anywhere else. Okay, it's a whole different kettle of fish. First of all, US lawyers don't even understand where these places are. All right. Yeah. So they got to figure out where these places are. They got to understand how the regime works. They'll say we want US law, and we'll have. And let me tell you, a normal US M&A transaction takes between 6 to 10 weeks. An African or an emerging markets transaction where the company is not located in the US, or you can substitute UK with US, although UK is a small number, will take you probably 12 months, right? So that's also something to think about. Who is your exit, right? If you're a B2B SaaS company and your customers are all in the US and you just happen to be in South Africa, it doesn't make sense to be incorporated in South Africa. 0.
Yeah.
So I think when people talk about, IPO is a great story, but the reality is that today, it's like a unicorn. Yeah. Very rare, right? Not only, in more sense of the words, but let me just, how much time have we got? We got 20 minutes, I think. Is that right? Dan, someone tell me.
Can give you 10 more, yeah.
10 minutes.
Yeah, let's go for 10.
10 minutes. Okay. Let's do, and are we going to let audience ask questions?
Yes,
I don't remember.
yes.
Okay,
when you're done in 10 minutes, then you can open the floor for questions, and
Okay, let's do a quick fire round. It's always fun. All right. So you got to ask. I'm going to ask a quick fire round. You can only answer the options I give you. You can't give me a long answer. It's just the options I give you. Okay. So number one, Delaware, necessary evil, unnecessary evil, or just evil? Zach.
Unnecessary evil.
Unnecessary evil. Okay, Andrew.
Yeah, I would agree. Unnecessary evil.
Dami. Oh, we got it. 3 out of 3 here.
Necessary evil.
Necessary evil. Okay.
Yeah.
And Samir.
Unnecessary evil.
Unnecessary evil. Okay. Okay, good. We got 3 out of 1. Mauritius, holding company or holding people hostage?
I'm gonna split the vote here because I like doing Mauritius. Great for funds, bad for companies.
And that's not the answer, dude. I said holding company or holding people hostage.
Holding people
hostage. Exactly.
Holding people hostage.
And that's why I wanted Samir and Andrew to share their insights on.
I have quite a bit of insight, and we've done some really unique things to deal with it.
Not too long.
And that's the thing. It might require a separate panel discussion, but I can briefly explain the interesting regime that we're dealing with in Mauritius. But their structure is such that you typically will require a management company. If you're not a resident, you cannot even be a COSAC.
Yes.
Which is quite unique. So, and the management companies have a regulatory oversight as well function with the FSC.
And they have to sign every bloody document, and they charge you $1,000, etc.
Well, yeah, and then there's 2 sides of it. There's the corporate governance side, and then there's the shareholder verification or KYC requirements that I think is what the room is getting at. Yeah, and we came up with a really unique structure in that we leveraged our cap table management system. And it's still kind of being completed, but we're ironing that out. So instead of going by pigeons, now every shareholder has certain steps to complete on our cap table, which then get reviewed by our management company, and then it creates reporting.
But there's a technology solution. Okay, exactly. I think that's a whole separate conversation about
exactly.
But solutions for KYC. Okay, yeah.
But I would say that the management company that you do employ is quite important, and something that decision needs to be requires serious thought and interviewing and meeting with different management companies to understand, can this management company help my company scale? I think that's the important part.
Okay, guys, let's not go down this rabbit hole.
Holding company is my answer. Sorry.
Holding company. Okay. Zach, did you want to say something important?
I just want to say, like in Mauritius in Mauritius's defense, they do have a 12% rebate for non-residents from a corporate tax perspective. So you pay effectively 3% tax on income as a corporate versus 15, which I think that could sometimes be, that could tip the scales over the fact that you should have to use carrier pigeons and sorry, I'm kidding. And Mauritius does not accept digital signatures. You should have to have wet ink signatures in Mauritius. And interesting, I just found this out yesterday, but if you have a board meeting, you have to have at least 2 Mauritius resident directors. No, but here's the crazy part. If one of those directors is not physically in Mauritius on the day of the
you can't.
That is also a problem.
It's part of the economic
reversely, Zach, you get to go to Mauritius and hang out for that board meeting.
That's my next stop.
Go to the beach after the board meeting.
I think Points Africa needs to have a home base and an office.
Many years ago, this is like 15 years ago, I went to Principe, which is in Sao Tome, beautiful island.
And stunning. I've been there too.
Of creating an offshore jurisdiction there, so they should do it. But anyway, that's another issue. Okay, I want to switch. Let's continue down the quick fire round. Rwanda, we haven't talked about Rwanda. Model jurisdiction or overachiever making everyone look bad?
I don't have a single one of our companies incorporated in Rwanda.
Okay, we know the answer. Dami.
Same. I don't know any. I know businesses there, but I don't know how they do it.
I don't think it's the right jurisdiction anyway. So next question, which jurisdiction is secretly better than people think? You only have one answer. And it has to be short, no long answers.
Singapore, from my side.
Singapore, okay, we'll come back to that. Dami?
I'm still thinking.
You're still thinking. Secretly better. Okay, we'll come back to that. Which jurisdiction to come with a warning label?
Obviously, Mauritius.
I would say Mauritius.
No, but the warning label comes with a good part that you can go to the beach. Okay.
And the warning label is clear also. It's very clear what Mauritius wants.
Yeah, exactly.
Mauritius also, by the way, is very close with France in the most number of public holidays.
Oh.
So they have a lot of public holidays, and
Good and
Mauritius
bad.
recognizes all religions, right? So it's like a Hindu holiday, a Christian holiday, Muslim holiday. It is crazy. Like Mauritius is on average off 2 days a week. So yeah,
That's good to know, Zach.
Okay.
Without offending others on the panel, I'd say South Africa.
Okay.
Is what, like the warning label? Yeah, I agree.
Yes.
Warning.
I think that's right. I think again, I think to your point earlier, Zach, if you go into South Africa, understanding the nuances of South Africa, it might be the right jurisdiction. But as a starting point, it comes with a big health warning, right? I think that's kind of where we got to.
And on my Singapore comment earlier, people don't know this, but Mauritius's entire new fund structure, the variable capital company structure, was modeled on Singapore.
It was.
The Singapore is just too far out from a time zone perspective, but Singapore has an incredible company and fund registration process. I mean, highly underrated. Just that it's far away from sort of Europe and Africa. But yes.
No, I know, because my family's in Malaysia, and like trying to call them or talk to them is always like either I'm asleep or they're asleep. And my family still hasn't worked out that the UK is either 8 or 7 hours. This morning they called me at 7:15. And I said, "Why didn't you pick up the phone?" Because I'm just waking up.
Yeah.
So I think, Dan, are we into the Q&A session? We can continue some more, but what are we doing?
You can have one last for a question. Then from there you move to the questions to the audience.
Okay, so audience, you've got a chance. Oh, by the way, just to repeat the prizes. So Zach got capital and customer. Andrew got taxes. Dami got vision. Did anyone say velocity? Because I had vision or velocity. Because velocity, I think, also comes back to where you want to incorporate, right? Because if you want to scale and you want to be scaling at all costs, I would say Delaware C Corp is where you want to go, right? So I think velocity was my other V. And then a special prize for Zach for coming out with exchange control. So it's ECCTV right now. So last question. What is one piece of advice, just one piece of advice you would give to a founder today, should they come to you and ask you the question, where should I incorporate? Shall we start with Samir first?
Yeah, certainly. I think it's just a fact-finding mission. So first, understand your commercial structure, where your clients located.
One piece of advice, eh?
Yeah, I'd say examine your business model, and then structure accordingly. That's what I would say. It's not about where to incorporate. It's about incorporating by function.
Yes. Okay. I like that. Incorporate function. I like that. Incorporating by function. Okay. Dami?
I would say incorporate where your customers are. So very similar to what Samir said. Your focus at that stage is, well, keep it short. Incorporate where your customers are.
Andrew? Just find the nearest beach and work back.
Both what Dami and Samira said, but I'll also add on top of that tax efficiencies and exchange control, because that's to me, in terms of what we're doing, is really important.
Okay. Zachariah, George, you get the last go.
Yeah, I mean it's sort of a bit of what everyone said, but I would probably prioritize access to your closest customers and your investors. So, yeah, those would be my final takeaways. Yeah.
Okay. So Dan, have we got any questions? I don't know how are we doing questions, by the way?
People can mainly raise their hand. Also drop the question on the chat. I could even read some of them. For example, there's one from Krupa. She said, have we seen Delaware C Corp, Mauritius Holdco, or an African OpCo? Is this an appropriate structure? Don't know what she means by that, but maybe Krupa, you can share more on your question if you're still around.
So let's repeat the question. So she said, is Delaware C Corp, what was the second bit? Maybe you can type it in the chat.
Yeah.
Mauritius Holdco and African OpCo, is this an appropriate structure?
Okay. Well, I mean, I think the answer is no, right? Because you haven't asked the fundamental question: what's the business, and what's it doing, and then you can work out where the appropriate structure is. So I don't think anyone on this panel, based on what we just talked about, is saying that you should decide where your jurisdiction is without doing a fundamental review of your business, where the customers are, and what your growth trajectory is, right? So anyone just saying, hey, is South Africa good? Well, no, because you need to do the first bit first. I think that's kind of my answer. I want to open it to my panel, see what they say.
Yeah, no, I hear you. I think that's the same sort of sentiments that I have. I think incorporating in Delaware and Mauritius at the same time, or well, if it's at the same time, I think it's a bit tricky, especially also from a tax perspective. But I agree with you, access to customers. There must be a reason you're investing or you're incorporating in Delaware. It might be an investment thing, might be customers, but those are the things that you sort of need to examine before you set up that structure.
So for those who don't know, please put in your questions in the chat. One thing we didn't really talk about whilst we see whether any questions. One thing we didn't talk about, we talked about incorporation, but we didn't talk about, where you should be, location, which is different to incorporation, right? And I think that some of the things we talked about is relevant to where you should be. But can we just quickly touch on what you think for an African focused business? So you're not selling to the US or etc. African focused business. Where should you be located, which is different to incorporation?
When you say located, like the founders,
physically. I mean, where would your team work? If you could have a team located somewhere, okay, I know these days everyone has, working remotely, etc. But if you had to have a team located somewhere, and I think what we find is that as startups grow, they do need to have some sort of central hub, right? Where would you be? Which place would that be?
Where your customers are. I think that's the only thing that makes sense.
Zach?
Yeah, it's a bit tricky. So I think your OpCo should obviously be where your customers are. But I'm going to say if you are a fintech and you have to deal a lot with the regulators, be as close as possible to where the regulators are. This is not the most obvious advice.
Yep.
But have your holding company close to the regulators. Yep. Especially if you're a fintech. If you're not a fintech, it doesn't really matter.
Yeah, I think the other thing that we didn't touch upon with fintechs, because of the extra regulatory scrutiny you have, you need to understand the local regulations, and maybe we'll have an R, but it doesn't fit to my CCTV. But the regulatory framework that governs fintechs can have a huge drag on or huge impact on where you incorporate and where you're located.
Yeah, I mean, like a lot of African fintechs are incorporated in Delaware for obvious reasons, but their HQ is either in New York or San Francisco.
Yeah, exactly.
So you got to, the difference between the two. Yeah.
And I think, and I think what you just talked about is kind of something that I speak a lot with founders, which is, whether you're raising capital, building a business or whatever, you want to go to where you're most likely do the thing that you need to do, right? So I know, Zach, you and I invested in Jimmy Utiba at Moodswing, And I told Jimmy, I said, Jimmy, what are you doing in Johannesburg? Right?
Yep.
Go to San Francisco. That's where everybody is. And by the way, it's kind of funny. So for those of you who, one of my favorite things that I talk about often is, what's the word? When you have, now it comes to me. So the surface area of luck, right? So maybe Zach, they're talking about surface area of luck. No, anyway, it's a well-known concept, right? So the wider your surface area, the luckier you are. So if you're sitting in Joburg and all your investors, all the people in your market, are sitting in San Francisco, you're not going to meet someone at Starbucks buying a coffee next to you, right? And it's quite funny how, and this actually happened to Jimmy. He met a guy, I can't remember who was the number 3 employee at Instagram, who gave him a $20,000 check, right? Now, that wouldn't have happened in Joburg, right? So actually locating yourself, or at least spending some time in the place that increases your surface area of luck and increases your ability to have these serendipitous meetings is actually really, I think, is really important.
Yeah, fully agree. Can agree with you more. Or at least have your head of investor relations in those jurisdictions, whereas your head of sales or your CEO could be on the ground in Africa. So
Muketsi Kaleke, she's asked a question. Let me read it out. For startups at pre-seed or seed, would you recommend incorporating in multiple jurisdictions? And then she says, I think it's a she, could be he, I don't know. In hindsight, mitigating the corporate governance aspects and the internal manipulation of IP to suit local requirements. And I'm not sure what the second part of the question means. Muketsi, if you can elaborate in the second part, but let's do the first part. Would you, as pre-seed or seed, would you recommend incorporating in multiple jurisdictions? And particularly for fintechs.
Yeah, I mean, I wouldn't spend. You're going to spend so much time dealing with regulators. I mean, pre-seed, seed. I'm assuming your primary focus is to fake it till you make it. Sorry, I'm just being direct. So you want to acquire customers as quickly as possible and then worry about a license. So I would just. I don't think personally at the pre-seed stage you should have more than 2 jurisdictions. One is where your IP sits, your holdco, and then your opco, and then everything else you can figure out later. Also, remember you can accept payments now through switches like InterSwitch, Flutterwave, etc. So don't ever say that, oh, because I want to open an office in Cameroon. You can get paid from anywhere in Africa into Nigeria or into Cameroon using switches like InterSwitch, Flutterwave.
So we've got a really interesting question here from Ted Iro from I don't know, is Riddler or RYDLR Cloud Services. I'm just going to read it out. It's a Kenya-based cloud infrastructure company offering GPU compute, cloud storage, HPC workloads, and data warehousing on a subscription billing model. Our closest customer concentration, interesting, is, guess where? Italy. 145 out of 202 customers, and we are evaluating an Italian SRL or alternative EU structure to support SEPA direct debit billing, Euro collections, and EU native banking payments. What is considered best practice for structuring the relationship between the Kenya operating entity and a proposed EU OPCO, potentially Italian SRL, handling customer contract, blah, 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 blah. We are interested in a VC-friendly structure. Dude, this is like, we need to write thesis for this question.
Yeah.
But does anyone feel comfortable just answering the question on basic level? Because I think it's like the same, right? I mean, it's like where your customers are. But let me have a go at this. So I think all the things we talked about in this conversation applies to that. Where are your customers? So here are your customers in Italy. Maybe you want to incorporate Italy. But I think the most important thing is get some legal advice, get some tax advice, get some accounting advice, all right? And get good advice. Pay monkeys, you get peanuts, okay? So, sorry, there's an old saying of my friend of mine. So get good advice, make sure it's joined up. And by the way, a lot of people see lawyers and accountants and tax advisors as you just go to them and tell them your problem and they'll solve this, they'll give you a solution. No, you got to do the work, right? Do the work, come up with the options, set out in a paper what the options are and say, hey, what do you think of these options, right? And I think you will get a much better response, quicker response, cheaper response, etc., if you do the work. And now with AI and all of these LLM models, you can do a lot of the work yourself, but you want to get it checked and double checked and triple checked with people who actually been doing it for the last 30 years and not just asking the computer the question. Yeah.
Cool.
Is that okay? He liked my that's it. Good. He liked my peanuts and monkeys joke, so that was also good. Dan, are we going to close up?
Yeah, I will close up with a last question from my side, actually.
Okay.
There is a founder that approached me. The founder is based actually in Togo, and there is a VC that is interested in investing. That's what the founder shared to me. And one of the conditions for the investment is that they open in Delaware. So they
Delaware
also register in Delaware. Because apparently it's a US-based investor. I wanted to ask, from your side, what do you think about it?
Okay. All right. All the documents are in French. I'm sorry I don't speak French, but you have to get things like nothing is easy, right? From a regulation and paperwork perspective. Like, there are all sorts of weird rules for being a Togolese company. So the starting point, if I went back today and I told the founder from the word go, I said, dude, can you just shift this to a holdco in France or wherever it is? But this Togolese company, it's really painful. So I completely understand where the investor's coming from. Just forget about moving to Delaware. Just for the fact that nobody should invest. Sorry, I'm saying from my perspective, no one should invest in a Togolese incorporated company because it's a nightmare, right? And I'm just saying that because I've got the scars to show it. I mean, not like deep scars, but enough scars that they made it painful, right? As opposed to a Delaware C Corp or a UK company where it's just easy. There's like I had to translate documents myself to work out.
I was going to say, what did you sign?
Yeah, exactly.
Yeah,
I mean, if in this particular case the investor insists on a Delaware C Corp, I would strongly prefer that in French-speaking African countries, you revert to a French holdco. I would not go down the US route because there's always the question of arbitration. And I would stick to either France or I've seen a few situations where it goes to Belgium. I would avoid Belgium because they're a confused country. They don't know if they're French or Dutch. So I would just stick with France if you're French holding, if you're a Togolese, Gabon, Cameroon. And then they also have their version of Safe Notes. It's called BSA Airs, BSAAIR. And they have very clear guidances about how these convert into pref shares. So if he's insisting on Delaware, you should just say, sorry, we have a holding company in France. If you can't invest in France, then you're not a right investor, and then just call it a day. I mean,
I think that's good advice. And actually, it's just something else that popped up in my head as you were talking about that. Everyone talks about, incorporating South Africa, Rwanda, wherever it is. I think one of the biggest things that the investors think about on these things is if there's a problem, can I resolve this through the courts? Yeah. Not only quickly and efficiently, but fairly.
Yeah.
Okay. Yeah. And the truth of the matter is that no one has confidence in African courts.
Yeah.
Okay. And that's just the reality of it. So as soon as you say, you can structure your investment agreements in but you can choose any jurisdiction. So then that's something else that becomes an issue as well, right? So choose your jurisdiction wisely, because you can have incorporated in Nigeria or wherever, but the jurisdiction that applies to the documents could be English law or US New York law or wherever it is.
Okay.
Guys, I've got a hard stop at 4:30, so
I think we're good. I think we're good. Yeah, no, we're good.
No, we're good. We're good. We're good. We're done.
Okay, so just to wrap up, thank you very much to my panelists, and Zach gets the prizes. Zach gets the prize for actually coming up with three things: ECC, and then Andrew gets T, and Dami gets V. And you collect your prize when you next see me, and I'll buy you a drink.
Sounds good.
Thanks, guys.
How
Thank you.
fortunate for us.
Make it Mauritius.
On the beach. On the beach.
Okay, thank you.
All right, guys.
Yes,
Yeah,
Bye.
thanks, Dan.
Bye.
Bye. See you on the next one.
Bye.